Hey, how's it going, guys? In this video, I'm going to be going over Fibonacci. What is Fibonacci? Fibonacci is a way to measure out the market and to see the actual, in terms of actual numbers. Instead of just seeing it as candlesticks, what you're doing is actually measuring it out. So what I mean by that is like this. You have, well, first before I get into it, make sure you have this on your Fibonacci. These ratios, 88.6, 78.6, 70.7, 707, 61.8, 50%, 382. Alright. Basically what these are, guys, is they are support and resistance. Okay, strong support and resistance zones. And also you can start messing around and doing a little bit more advanced stuff, going into harmonics and all that, which we'll get into later. But just for Fibonacci, what I want you to understand is all you're doing is measuring out 2 points in the market, relative high to relative low. But make sure that you have you can properly identify an impulse leg. An impulse leg is a large move that breaks structure. So what I mean by that is this. See how this up move from this low to this high? It broke this previous structure right here, this previous lower high, right? See how I broke it right here? That's a big up move. Alright, so we can measure that out. Alright, so all we do is take out our Fibonacci, measure from low up to this high, and notice that we have support right around the 50%. Okay, if you're taking trades off the Fibonacci, let me do another example. But if you're going to take it off the Fibonacci, what you do is you wait for you wait for an easy to identify move. Like, let's say this impulse leg is very easy to identify. What you do is you wait for a move like that, and then you measure out your Fibonacci and you wait for the pullback. All right. The reason you wait for the pullback is because you want to get a better entry back into the trend, right? Since this is an uptrend, this impulse leg was towards the upside. We're not going to get in right here, right? Because that's going to give us a bad entry for a buy. So what we do is we wait for a pullback to one of our Fibonacci numbers, and then we look to take the trade with the trend back into the trend. Make sense? At least up to this high, right? So if we would put a trade in here, we would probably wait until, this is the 4-hour chart, so we will probably wait for a reversal pattern to close off one of these Fibonacci's, a strong one, back into the trend. Probably have a trend line in here too as well, but what I mean by that is this. If you take a trade in here, your take profit's going to be at the high. All right. Let's say you get in after this big bar and you wait for a pullback and you get in, buy, your take profit's going to be at the previous structure high, right? We're not going for extension targets just yet. Alright, so let me find another example, so not to confuse you guys, keep it very simple. Alright, right here is a good example. Alright, so we have this relative high to relative low. Alright, let's measure that out with the Fibonacci. Where do we see price come and reject off of? The 61.8, right here. Color that red. Alright. That's our strong support and resistance right there. Resistance, 61.8. Alright, we're going into a downtrend. That's why this is an easy to identify impulse leg. Why? Because you have a large down move. Now you're just waiting for the pullback before you get back into the trend, right? You get at the 618, and that's where it rejects. So say if you took a short position, somewhere in here, you wait for the pattern to close, you wait for a small pullback before you get in. So you got in here, stop loss at the high, target, previous low. You got a 3-to-1 risk to reward ratio, all right? And also, using your trend lines, you can also find an opportunity in there too. I think I saw it right there. Near miss, right there. Alright, if I draw a trend line from this A point to this B point and then I run it through, notice how price stayed under it. and then we get a nice rejection right here at the 618, right at the trend line, right? Fourth tap, 1, 2, 3, 4, fifth tap. Oh, get the drop off. Okay, so let me show you another example of Fibonacci. For your take profits, they're going to be at the low. If you're taking off the Fibonacci, the conservative take profit would be at the previous low, all right? Off the 618. Previous low would be your take profit. Okay, let me go back a little bit. Show you another example. This is very easy to identify once you see it. All right, from see this swing high to this swing low. Let's actually measure this out and see how much this retracement, this double top right here, came in. I think it's like looks like a 50%. Might be a 618. Yeah, 50%. See how they came in right at the 50% and they did a double top right here? You get a lot of rejections and then boom, slow rollover. Alright. If you took a trade somewhere in here off this 50% rejection, say you waited for this reversal pattern close, wait for a small retrace, stop loss at the high, take profit at the low. It's a 5-to-1 risk to reward, right? 324 pip reward. Alright, just off of simple Fibonacci stuff, guys. Alright, and then if you actually drew a trend line out, let's say from this high, it might not be pretty, from this high to that low, run it through. See, I did a false breakout right here of this trend line, and it finally broke back down, come up for a retest, boom, drop, crash right there, boom. Take profit would have been hit a long time ago. Alright, so make sure to use, whenever you're using Fibonacci, make sure to look left, okay, so you see how this rejected at the 50% right here before it's continued downwards? I'm going to look left, look for structure. A lot of structure right here. See it? Structure all along here. See 50%, look left, a lot of structure. Alright. The market after, I think it was it Brexit? Brexit might have been right here. And Brexit was right here. Basically, the market found this where it flattened out right here. When it broke through, it just came up for the retest. All right, very simple. Whenever the market chills at an area and then it finally breaks through, most likely it's going to come back up for a retest. So that's part of market structure. It's in another video. I just wanted to show you guys Fibonacci. But for Fibonacci numbers, wherever you see the price rejecting off of, always look left and see if you can match that Fibonacci with some type of structure. Just find an example right here. A little bit of structure right there. Oh, right here. It's a nice example. See this structure right here? After this big crash, it flattened out for a second before breaking through again, back into the downtrend. That low, I'm going to run it through the future and see how I retested right here. Try to find a Fibonacci on that one. Alright, so this is kind of a crazy move, but I'm still going to determine that this is a relative high. This is a relative low. So I'm going to try to measure this move where it came in at. Looks like it's going to be a 50%, maybe, possibly. Like 382, 50%, yep. Right at the 50%. Literally herred it. Alright, as long as it gets close enough, it'll be, you can count it as that fib touch. So if it's too far away, then it doesn't count, it's not valid. So let's say this candle was somewhere in the middle, it'd still be a 382, right? So these candles, see how they reach and they almost touch the 50%? That's why I say it's a 50% rejection. Alright, if we took a trade off there, say we took it right here, short position, stop loss at the high, take profit at the low, we're talking about a 5-to-1 risk to reward ratio, 320 pips. Alright, that's in a few hours, 4 hours. 4 to 8 hours, you bank 300 pips. Alright, very simple Fibonacci stuff. We'll be getting more into harmonics and ABCD patterns, all that fun stuff that you guys want to learn. For Fibonacci, what I want you to learn how to identify is the impulse leg. So big, obvious moves like this. Alright, and then you're just measuring the pullback. That's what you're doing with your Fibonacci. Alright, big obvious moves, and then just measure the pullback. Alright, so let me show you another example. This one is decent. I can search it out. See how this started a downtrend? This is one impulse. This is see this drop off right here, very sharp drop off. And then notice how it spiked back up for retrace. I bet you that's a Fibonacci number. Probably 786, maybe a 707. And then it kept dropping. See that? This is what I mean by identifying impulse leg. Impulse leg. Measure the Fibonacci. High to low. What did I say? 786. Right at the 786, like I said. Boom. And then you get that reversal pattern forming afterwards. Boom, short. Got 2 to 1 risk to reward, not bad. If you tightened up your stop, it'd be better. 3 to 1. 3 to 1 risk to reward. So yeah, just practice Fibonacci, guys. Try to identify an impulse leg. So an impulse leg is going to be a nice big move that's easy to see, that's going to break structure. You'd like to see it break some type of structure before measuring it out, okay? Very simple. When you see Fibonacci reject somewhere, always look left and see if you can find some type of price repeating there from the past, all right? That's what I mean. So price break structure, it's going to come back for the retest. Boom, 50%, take profit at the high. Okay, so another example, guys, of Fibonacci. Let me identify another impulse leg from this high to this low, right? Relative high, relative low. It's a nice impulse leg, a nice big move. I'm going to try to measure this retracement, see where this came in at, all right? Looks like it's going to be 707, 786. Let's see if I can eyeball it. High to low. Yeah, 786, 707, right near there, like I said. I'll stretch it out for you guys so you see it a little bit better. Okay, this is just another example. I like to see the Fibonacci reject off the 61.8, 786. All right, those are my favorite numbers. So 382 for a trend continuation, right? Strong trend. We'll just bounce off the 382 and continue up. You see how I got near the 786? I'll count this as the 786 touch just because it's right near it, like literally a couple pips, you know what I mean? Probably like 20 pips or less near the 786. And let's say we took an entry off the Fibonacci, right? Let's say it rejects off the 786. We see a strong candle right here. Sell, stop loss at the high. It's a nice stop loss. But our take profit's going to be at the previous low. We're talking a 5.5 to 1 risk to reward ratio, 787 pips. All right, going off this 4-hour chart, Fibonacci. All right, it's very, very strong. It's very, very powerful, guys. So the same thing, you'll start using your trend lines as well. You see it stayed underneath the trend line all the way through. Then you get a break, finally touches your low, breaks the low, comes back up for a retest, and then you start trending it upwards. How do I know it starts trending upwards? Start making higher lows, and then it broke a lower high right here. Boom, start going into an uptrend. All right, we can measure this out with the Fibonacci as well. So very simple, guys. Look, I'm gonna just showing you examples of Fibonacci so you guys understand it. This low works on any chart, any time frame, right? The higher the time frame, the better. This low to that high, measure it out with Fibonacci. Low to high. Boom, 786. What did I tell you? Very, very strong Fibonacci. 786, 618, 382. All right, 618 and 786 are my favorite. Notice how price bottomed out right here, and then you find that you get a nice reversal pattern right here all the way up. That could have been an entry. Off the 786, bottomed out at the 786. We're at the bottom of a downtrend. It's been dropping for a while, so might be getting into an uptrend. All right, stop loss below the low. It's a very big stop loss. I'll tighten it up, probably be right here. And then my take profit could be either at the previous high, and once we get into more advanced stuff, it'll be an extension. But right here, 2 to 1 risk to reward ratio. Very solid trade right here. Very, very solid. All right, and then if you go on the 1 hour chart, I'm sure you get some type of counter trend line break right here, or trend line break right here. If you measure it out with a trend line, the 1 hour chart. All right, so if you see a setup on the 4 hour chart with the Fibonacci, you can go out to a little bit lower time frame, like a 1 hour, and you'll be able to find entries in there. But I like to stay on the 4 hour now. 1 hour just for sometimes for entries. Right here we have, I think I can see a little Fibonacci in there, 382, but it's not much. But look, if I draw a trend line from this low, I bring it up. See, now I'm just riff-raffing, free-flowing. So you got that trend line bounce right there. You can measure the Fibonacci from this high to this relative low. It'd be like a 50%, 382. Super tiny Fibonacci in there. Yeah, 382. Boom. But yeah, guys, go back through your charts, practice this. There's no way I can help you understand it more than that. I mean, it's just very simple. Fibonacci is support and resistance. All right. What you're trying to do is you're trying to identify an impulse leg first, and then trying to see if you can go back with the trend. So this is an impulse leg. This would be the last example. See this high to this low. All right, that's a strong down move. Notice how it pulled back sharply. Start measuring that out. Very simple. Measure that out. High to low. 707. Rejection, right? Wanted to reach for the 786. It couldn't. Stayed right near that 618, 707. Boom. Look for entries somewhere in there. All right. Take a short position somewhere here. Let's say off this reversal pattern right here. Stop loss above the high. I mean, your stop loss can go all the way up here, but I like to have a little bit tighter stop losses right here. Right near the high, this previous high. And then target at the low. 4-to-1 risk to reward ratio, 400 pip reward possibly, right off that trade. So these are very strong, guys. Like I said, it's very easy to do. All you have to do is find an impulse leg and then measure it out. So there's one right here, high to this low where it flattened out. Measure it out, 50%, boom. Take profit gets hit, previous low got broken. If you're on an uptrend, you want to measure it from low to high. 618 right here, it's beautiful. Now I'm just free flowing, guys. Take profit at the high. Say you got in here. Take profit at the high. Stop loss near the low. 618 near the low. 4-to-1 risk to reward. For downtrends, you want to measure from high to low. For uptrends, you want to measure from low to high. All right, depending on the situation, but that's most of the time how you're going to be measuring. On an uptrend, if you want it to continue up, if you predict it's going to keep going up, do it from low to high. If you're in a downtrend and you think it's going to keep going down, you measure it from high to low. All right, just identify a big move. Identify a big move like this, and then when it starts pulling back like this, that's when you can start measuring it out. Like, oh, boom. See where this retracement comes into, right? 382 is going to be the strong continuation, like trend continuation, Fibonacci bounce. If it bounced off the 382, it's going to go back into the uptrend strongly. All right. I like to see deep retracements like 618. I like to see them all the way down here. All right, before we take off again. So go through your charts, guys. Practice those. We'll go more into depth in the next video. I'm going to start going into a little bit of market structure inside the Fibonacci. So let's go on to the next video, guys. On to the next level. Peace.